You know what's funny about taxes? Nothing. No. Taxes suck. They say it's a voluntary system. Yeah, you voluntarily pay or voluntarily go to jail, but totally your choice, right? They say there's two things you can count on, right? What are those? Death and taxes, which is a bit redundant since most people would rather die than pay their taxes.
The only way your IRA or 401k is tax advantaged is if your plan fails, or I guess if the government reduces the tax rate. Don't think that's going to happen. See, these aren't tax savings, they're tax delaying. There's such a huge difference between saving tax and delaying it. One says you don't have to. The other one says you don't have to pay today, you're still going to owe eventually. And this savings, by the way, when you put money in the plan, is not in your pocket. Your money is trapped inside of a government-controlled, government-sponsored plan, and you're at a 10% disadvantage from day one if you're under 59.5. And by the way, you still owe taxes when you take your money out. Now look, advisors will tout how beneficial this plan is, but ask them, how do you get to the money? What's the exit strategy? How can you get your money out tax efficiently? Now if they answer in the following few ways, fire them. Number one, if they tell you you'll be in a lower tax bracket in the future, how are you going to be in a lower tax bracket? Have less money? Have more kids living at home? Well, if they're over 18, they're not a write-off like they were before. You know, start a business, have a bunch of tax deductions there. In the future, if you're funding these plans, it's probably because you want to retire. And when people tell you you can live off less money and retire, ask people how that's working for them right now because of all the inflation we've seen in 2020, 21, and 22, and who knows how long that's going to continue. They can't live off less money. So saying that you're going to have less money in the future is actually them telling you, I think the plan's going to fail. We're not going to make you that much money. This plan isn't going to have enough money to continue the same lifestyle. Others say, oh, well, guess what? You can pay off your home and then you won't need that money. All I know is if I have 7 days off a week, I'm probably going to order far too much Amazon. Maybe when they came up with that notion of you can live off 70% of your pre-retirement income, that was before we had one click, before something showed up to your doorstep. So be careful with that thing. That's the first reason to fire them. They say you're going to be a lower tax bracket, admitting that the plan's not going to work. Second is they tell you that the tax-deferred growth will give you more money. Okay, let's break that down a little bit. If tax rates stay the same, they're equal now to when you retire in the future and pull money out of the plan, it doesn't matter whether you do a Roth IRA or traditional IRA. By the time you take out whatever amount, you'll net the same as far as what you could spend. Why? Because, okay, with the Roth IRA, you're taking after-tax dollars and investing them. It grows tax-deferred, and under the current circumstances, after 59.5, you can take it out tax-free. Awesome, right? You paid tax on the seed, not on kind of the harvest. On a traditional IRA, you put money in pre-tax, it grows tax-deferred, and when you take it out, you pay taxes. Again, yeah, it'll look like more amount in the account, but if you pull that money out, you owe whatever tax rate on it, and then you end up netting the same amount that you would have in the Roth. So Roth is pay tax now, take it out tax-free later. Well, if taxes go up in the future, you'll be happy that you paid the tax today. If they go down, which I don't know how they're going to with the amount of government spending that's out there, you might want to reconsider. See, traditionals always pay tax later. And often people think that paying the tax later means there's the money that's going to grow to a larger amount, and yes, it will. There will be more money than in the Roth, but you'll have to pay tax and take it out and then net the same amount that you would have had from the Roth. But again, if taxes go up, you'd be better with the Roth, paying tax on some of the lower tax rates today and along the way. So let's talk about the biggest reasons these IRAs and 401ks and government qualified plans are touted as tax advantaged when they're actually a disadvantage. Here's the reason they're a disadvantage. Number one, inflation. As you need more money to maintain the same lifestyle, you'll start to have a higher marginal tax rate. Let's look at the marginal graphs. Let's look at the top tax rates over time. Look from 1944 to 1981, how high the tax rate was during that time. Imagine at the time where you see it above 90%. What if you took, like right now, where it's less than 40%, and you defer it into the future where it's up to 80%. Wouldn't you be kind of pissed? So inflation means that you have to earn more money to live the same lifestyle, to have the same purchasing power. When we have to earn more money, you'll see you're going to start to be pushed up to higher rates because you have more income coming in, even if that income doesn't allow you to purchase quite as much. The second thing is related to that, raise tax rates. Looking at the same chart, notice how many years were higher than the taxes today, and the government's $30+ trillion in debt. So what if they have to raise revenue? What if they have to raise money? Part of how they do that is taxes, the biggest part. So what if you have more money in the future because you're successful, and that puts you at a higher rate? Or what if the government says they're just going to raise the rates because they need more money? Or what if because of inflation you have to have more money to live the same lifestyle? These are disadvantages to a retirement plan. Now the third piece. What if you don't want to take out the money because you're worried about paying taxes? If you hate paying taxes today, don't you think you'll hate paying taxes in the future too? Like you're deferring, you're delaying, because you're like, I don't want to pay tax on this, and I get this great tax advantage, but when you go to pull it out, you're like, oh crap, I don't want to pay taxes. So if you never touch the money, it might as well be a 100% tax rate. And what if you leave that behind to your heirs? You can leave it to a spouse, tax-free. You can, I guess, leave it on to your kids if you do a stretch IRA, stretching it out so that you don't pay tax, but then again, they can never utilize it. So if you do it right, I guess nobody spends the money. And what's great is the institutions, they keep taking the fees, and I don't know, I'm not a huge fan, as you could tell, but if you leave this behind into, an heir that's not your spouse, it could be taxed in that year, pushing it into the highest tax bracket if you have a decent amount of money in this. These are my concerns. Number one, inflation can mean that you have a higher tax rate in the future just because you need more money for the same lifestyle. Raise tax rates. The government may say, hey, we need more money because we're spending and we're at $30+ trillion in debt. And maybe it's just that you have more money in the future due to success. These could all push your deferred taxes into a higher tax rate in the future. And then just the psyche of not wanting to take the money out because you hate paying taxes now, but you still hate paying them in the future. So you keep delaying it until they force you into required minimum distributions. Look, if you want to navigate this crazy financial world, I've got a great gift for you. This is going to help you with this. It's wealthfactory.com/megakit. 2 of my books, Killing Sacred Cows, which really dives into this and talks about some solutions, and then What Would the Rockefellers Do, which is a very specific tactic and strategy that's an alternative that has much better tax advantages than these types of plans. Plus, you'll get cash flow guides and even more. You know what's less fun than talking about tax? Is paying it, especially considering most people overpay on their taxes. So, look, I've done what's the seemingly impossible thing, which I've merged all of this notion as a comedian into this topic of tax to make it more enjoyable, more fun, while putting more money into your pocket so that you stop tipping the government. So if you like that, if you like keeping your money, you like learning while you laugh a little bit, well, go ahead and follow the link and just watch the next video now.